Good afternoon, my name is Jordan Lambert, market analyst at Gelatom Management. After trading in the 1320s and just below the 6-week bearish trend line for much of yesterday, gold suddenly plummeted, making a daily low of $12.94 and subsequently recovered about $20. Currently the market is hovering just above 1300, but the heightened volatility of late does suggest further declines are to come. The impasse in Washington draws closer to the 17th of October, which has been stated by Treasury Secretary Jack Lew as the point where the US will have run out of money to pay all of its bills. Investors do not seem too panic-stricken yet, because a US default is almost impossible to imagine. However, a credit review or credit downgrade of US Treasuries could trigger that stock market sell-off many are expecting. So how will gold react to a heavy stock market sell-off? Well, during uncertainty and risk aversion, gold can outperform other assets due to its safe haven appeal. But if the sell-off is severe in the stock markets, stock-related investors that are highly leveraged they would have to liquidate some precious metal holdings in order to satisfy their margin calls on their stocks. And if this happened, this would instigate a sell-off in the precious metals markets as well. This has happened many times in the past, and it tends to happen when in a high leverage market, a high leverage environment like now. So just be aware of that. If we see a stock market sell off, yes, gold could go up momentarily, but if it's really severe, we could see a reverse in gold as well. Let's just take a look at the chart. The daily chart has captured my attention mainly now. We can see that this bearish trend line, this 6-week bearish trend line, is still intact. The bulls failed to push through and break the trend line yesterday around 1330. So this indicates that the trend line is still intact and downward momentum may build. And also we've got the Ichimoku cloud here. I tend to use this every so often, mainly use it on the larger time frames, and we can see that price broke through the Ichimoku cloud, then it's had a retracement, finding resistance there now. So with resistance behind it, it looks like it's contributed to the recent decline. We could see further declines to come. That is pretty much the analysis today. Technically it looks bearish, but I would not be surprised if gold suddenly shot up due to any fears escalating over the showdown in Washington. But for now it does look bearish from a technical perspective. Thank you very much for listening to me, and I'll speak to you again tomorrow.